because if not, I'll forget. So pretty much what we're gonna do this week is a follow-up of last week, where we could have gone right, where we could have gone wrong, what I did and how I avoided it, and just pretty much what I'm looking for this week, right? So I think last week we had NZD, yeah, we had NZD CAD, right? So we'll put it up here for now. You guys can hear me all good? Everything's perfect. Fire. Okay, cool. So let's start off with AUD JPY, right? So AUD JPY, last week it was bearish in the weekly, bearish in the daily, bearish in the 4-hour. We're waiting for rejection of our area of interest, and I believe we had marked this off as our area of interest. We had marked this area off as our weekly area of interest, so we were waiting. Let me see the dates. So if it was last week, it was the 13th. So we were around, yeah, right around here. So we were expecting for price to come back into this area to then sell. So we obviously came back into this area, gave us our first rejection, our bearish engulfing, pretty much everything we were looking to get into the trade. Rejection from round psychological number, rejection from the 4-hour EMA, but I think we either weren't in session or there was something in here that I didn't like, because yes, on the 15-minute, it did break the structure, which was beautiful. As you can see here, this is obviously what we're looking for. We're looking for pretty much this break of structure right here. You can tell we have this bearish engulfing, and along with this bearish engulfing is the 1-hour, 2-hour. So this trade right here is more than valid to take. You put your stops anywhere around here. Your take profit would be anywhere around down here, giving you a 1 to 3. I personally didn't take it, probably because I wasn't looking at the chart at the time. But would I have taken this trade? 100%. Would I have gone and stopped out? 100%. It is what it is. So probably me being away from this trade was a good thing, and it avoided me from this loss. But this is the importance of the area of interest, because then we pretty much broke above, use it as support to go to the upside. And then obviously here we know that we went bullish, right? We went lower low, lower high, lower low. Once we broke above this, we went bullish. So in order for me to take this trade, I needed the 4-hour to then go bearish again. This case, we went bearish. And on this retracement here, it's pretty much the same thing. We understand that in this retracement, price is going to start going bullish. Once you start going bullish, I need that shift of structure to go to the downside. So within this move right here, this is where I waited for that shift. I think we got the shift. I think it was on the 15-minute. Yeah, so if you notice right here, this was the shift right here. We had whatever, you see the shift here go from low, high, lower, low. Then we start heading to the upside. And then here we went higher, low, higher, high, lower, low. So I pretty much took the trade right here after the break of this. I really didn't like how I was selling right into technically a 15-minute support or resistance or whatever. But that's why I kind of gave myself a pretty big breathing room. Notice I put my stops not only above round psychological level, but above the zone. And luckily that saved me, because price ended up doing exactly what I didn't want it to do. Rejected that area, created a high, kind of rejected off of this whole entire zone. And then we came back into here and rejected round psychological level again. And then we finally broke through on Friday. I'm actually still holding this whole entire position. I just decided to hold it. I don't think I got taken out of break even, maybe because of the spread. I haven't even checked. But yeah, this trade from last week, it's pretty much still the same. If you notice, we were just waiting for a pullback to area of interest to then sell. We had that. We just went a little bit above on the 4-hour of the area of interest, but the sells are very much the same. They're very much valid. Where would I look to get in again if I'm not in? I would pretty much literally take the trade right now, or not right now, because we obviously don't trade on Sunday. But if you notice, we're creating a lower high perfectly at the previous structure level and rejection from the EMA. So this is kind of like the perfect day trade, and we're not that far from the area of interest. So it's a huge plus. So pretty much this trade, if you could have managed to get up here, the ideal spot would to be here. but I don't take trades on Sunday. It's probably one of my biggest rules, but we still have a very strong weekly rejection candlestick, rejection from the around psychological. Daily is just giving us a beautiful just shift of momentum. You can see how it comes up with energy. It just stops at the EMA, stops at the support level used as resistance. And then we've obviously had rejections to the downside. Now it's just managing how to get in. Why don't I take trades on Sunday? Because every single Sunday has to create a wick. If you notice, every single weekly candlestick has to have a small wick, even if it's something as small as that one. I don't know if you guys see how small it is, but it needs to create that minor fluctuation so the market just has that like the movement, right? Even though, yes, we have technically had it, I just don't take trades on Sunday. I could take it Sunday night, so like pre-London, so in a couple hours I could probably take it, but not right in market open. Spreads are terrible right now. They'll eat you up. But yeah, this trade pretty much looking good, and it's pretty much the same. Just last week it was a little slow towards this area, but everything remains the same. Did you guys understand this one? You guys want me to go back a couple steps? Was it simple? What do you guys think? What if your entry signal shows outside of your time to trade? Do you pass up on it? Yeah, bro, pretty much. It depends how crazy the grade is. What do you clean? I mean, what exactly would you guys want me to, or I think just one person wants me to touch up on something. Perfectly explained. Same trade, just didn't want to hold over the weekends. Yeah, fire. Yeah, holding over the weekend is something that you'll get over time. You just build that up, like you build that, I want to say, tolerance. It just depends what you're used to. So moving on to GBP JPY. Do you go over all the pairs on Sunday? So I was gonna go over all of them, but I kind of already did. I was just bored here at the house, so I just went through the ones that are the top ones for the week, at least for me. So we'll go through over all of them, right? So GBP JPY weekly time frame. So you guys remember last week how I was explaining to you the importance of knowing where we are in the market. Do you guys remember that, right? Before I keep going into this trade, right? So the first thing that I said last week, you guys can again go back to last week's recording, is you need to understand where we are on the weekly. And on the weekly, we're right here. We're at the spot where we're looking to go like this. So if you go down to the daily and then the daily looks something like this, you got to understand the daily had to go bearish in order for this time frame to have the pullback to this level, right? So this is what I was explaining last week. Like, yes, it did look clean, the daily time frame for the sells. If I show it to you like this, is the last week recording. Yeah, the last week recording is in Kajabi. It's where the Guided Bootcamp is. There's a little section down there with the dates, which all of these are going to have dates, right? So along with this one, yes, this looks beautiful. We're super bearish on the daily. We're going to have a retracement, reject the EMA, reject support, resistance, support. Looks pretty much like AUD-JPY, right? Tell me not. Kind of looks the same. We're having the same retracement. We're having the same rejection from the EMA. Everything looks good, but there's one big difference in between both. The weekly is bearish on AUD-JPY, and then the weekly is bullish on GJ. So that is the huge difference, and that is what people they don't look into, because nothing against whoever educated them or wherever they learned from, but they just really don't understand the market. They don't know where it is. That's the most important thing. Where are we? Are we on the weekly pullback? Are we at the weekly area, or did we break through that weekly area? Like, where are we? So in GJ for last week, we're at that weekly area where you're supposed to be buying. You're not supposed to be selling. So this is why I personally wasn't even interested on taking this trade to the short last week. Yes, it looked okay. I was looking at it, but I didn't really entertain it. I just simply stayed away. And as you can tell, you can see how the market has shifted from bearish, lower low, lower high, lower low, to bullish just beautifully. Like, you can just see these stairs now shifting to the upside. You guys are seeing that, right? It almost looks like artwork. Looks pretty much perfect. I don't have a lot of lines drawn up here, but they are going to make sense in a second. So in this case, this is where we would still understand that the daily is bearish and we understand that the 4-hour is bullish. So first things first, we know we're not day trading this anymore to the downside. Now we're pretty much swinging it to the upside because we're going along with the weekly. So here we have weekly rejection, obviously, from this structure level. We go down to the daily time frame. Only thing I don't like about the daily is it's kind of just had a nice move up. I kind of want the daily to have either a pullback to this area or this area, because remember, my number one rule is, well, there's a couple rules. My number 1, 2, 3 rules, whatever, is where are we buying? We only buy at weekly area of interest or daily area of interest. We don't buy at any other spot because it's just simply not as strong. It's not going to have the same push. It's not going to have the same respect. It's not going to have the same anything. So for this case, kind of the only daily area of interest that I could have marked off to buy was the same spot. And then maybe this one. But the thing with this one is I'm kind of pushing it. Does look okay. Anything that has more than 3 points would be strong. So as you can tell, we have 1, 2, 3, 4, 5, 6. So a little nice pullback into this area like this, a little wick in like that. That's where we would get in on the 4-hour, 1 hour, whatever time frame we could get, right? So as of right now, we are. Did you guys understand that so far? You guys get what we're looking for? Type 1 if yes, type 2 if no. Perfect. Fire. A lot of ones. Perfect. So when we go down to the 4-hour, what a coincidence that not only is it a nice 4-hour area of interest, but we also happen to have the 4-hour EMA there. So this is kind of where we got to wait for the trickle. And again, this is what we're going to wait for. We're going to wait for the trickle into here. When we trickle into here, the moment we shift bullish on the 30-minute or on the 15-minute, that's when we will take the trade. And then we understand that this market has to go bearish in order to make it to this zone to look for the buys. Do we all agree with that? Type yes if 1, type 2 if no. Perfect. This right here, what I'm explaining to you guys, this took me 4 years to really understand. So the fact that you guys are getting it already, you guys are ahead of the game. And it's going to avoid so many losses, because if this market simply doesn't shift, it's going to keep going to the downside. It's tricky at the beginning. Yeah, it's tricky because, you got to just see it a bunch of times and then you get it. It looks so simple. Yeah, it's so simple to be true. Yeah. Okay, so this is pretty much what we're gonna wait. Once we get the shift of structure into here, then this is where we wait for it to go bullish. This is where it's just the same thing every time. This is where the EMA will then go bearish, and then at the break, we then have the little pullback. That's when we go long. And at this little break right here, this is where on the 1 hour, 2 hour, whatever the case is, we always tend to have a bullish engulfing. And that is our entry signal. So for now, GJ, we're going to wait for this here. Pretty much it. I have this zone here because I think this is the area where it's going to reject and have the pullback from, simply because it's a level of support and resistance. But that's pretty much it. And I notice you usually go for a 1 to 3. Honestly, my risk to rewards, I really try to make them as big as I can. If I can get a 1 to 11, 1 to 10, I really would. But the minimum I aim for is 2.5. But if I get a 1 to 3, cool. But I don't have a preferred. It just has to be 2.5 and above. Could you also wait for the daily to go bullish? By all means, you can 100% wait for the daily to go bullish. Just waiting for the daily to go bullish means you have to wait for the break above this trade. Above this structure point. So in order for this to break above this structure point, there can be some nice trades that you can get in here when it does this. You know what I mean? So it really depends. Again, it goes all based on your risk tolerance. All this is doing is it's grading your trade. You waiting for this to go bullish, it's going to give you a much better trade than not waiting for it. Doesn't mean that this trade isn't going to play out. It's just, it's just a different grade. So did you guys understand GJ? Are we all clear on GJ? Does it look clean, simple? So for sells, because right, you gotta be on both sides. Let's say you're looking for sells. Honestly, sells, you're gonna have to wait for the break under this level to then go to the downside. But I'm not looking to sell this anytime soon. No, Jonathan, you're messing around. Why don't you wait for the shift? I'd just rather wait for this shift. So for now, okay, so you guys got GJ. All right, so now we got gold, right? So gold, are we bullish or are we bearish? Let's see. Are we bullish or are we bearish? It's a bit tricky. And I'm not gonna say the answer, right? I'm gonna let you guys say the answer. Okay, I'm seeing a bunch of mixed answers. This, bro, you guys have to watch the full guided bootcamp. Okay, so let's do this. We're gonna go through this together, right? All right, so everybody's saying a lot of different answers. All right, is gold bullish or bearish right now? Is this bullish or bearish? The market structure. Okay, correct. So this market structure is bullish. We have higher high, higher low, higher high. So we understand as long as we remain above this level, and as long as we remain above this level, we are bullish. Do we all agree? Okay, so let's do this. Let's mark this off like this. Perfect. So we all agree on this. Okay. So anything in between here is simply market structure. The moment we body close under, we are bearish. And the moment we body close above, you just simply create a new higher high. Okay, so let's wait for either one of those to happen. As of right now, all of this is bearish. That doesn't count because that's simply just a wick. Again, you got to wait for the body closure above, right? So again, we'll just keep it going here. Keep it going. What about this? Are we still bullish or are we bearish? What do we do? Okay, perfect. Okay. Okay, let's see. Nothing. Okay. All right, let's see. We're still bullish. Okay, boom. So now we have 100% shifted bearish, correct? Type 1 if yes, type 2 if no. Okay, perfect. So we all agree. So would this be our new lower low? Right, so this would be correct, our lower low. And then what would our lower high point be? Would our lower high point be 1, 2, or 3? Which one would be our lower high point? Okay, perfect. So if it would be 0.3, we know that as long as we remain in between these 2 points, this is bearish. And what we would do here is we would mark off our area of interest. Let's say we just call it this. We're looking for a pullback into here to sell, right? You're all with me? Simple, pretty much the same thing, right? It's textbook. Okay, let's keep it going. So this would now move again down. We just keep pushing it down because we don't know when it's going to stop. We just keep going with the body. Let's keep it going. So wow, we're at an area of interest. This is where we would go down to the daily, 4-hour, look for the shift of structure, all that stuff. But in this example, we just want to know whether we bullish or bearish, right? Wow, what a coincidence. What a perfect rejection from our area of interest. Now we should have a little wick retracement in here. If it's not this candle, then it's the next candle to take the trade short. Is this a lower high or not yet? Would this be a lower high? Type 1 if yes, type 2 if no. Perfect. Okay, I almost tricked you guys there. Let's keep it going. So the moment we body close under, would that be a lower low? Not yet, because it's just a wick. Again, until we don't body close above this line or body close under here, we are still within the same market structure. So in this case, no body close under. Yes. So now this would be our new lower low. And then this would be our lower high. Do we all agree? Type 1 if yes, type 2 if no. Perfect. Okay. So perfect. So this is, we'll keep it going. So this is where we have we just keep it going with our lower low point. So this would be our lower low. Well, technically our lower low would be this point right here because we go to the body. I just thought that's where the body was. So this is where we wait. We gotta wait for the break above or break under. So we'll keep it going. If you notice, we never body closed above or under, so this remains bearish. For all of those that said that it was bullish at the beginning, you guys are seeing it. You guys are seeing the importance. I see a lot of smirks. I got every single one of you guys. Like 80% of you guys were saying bullish. And I understand why. It's because you see this breakout, you see the breakout of this structure point, but you got to understand the importance of the market structure. If you ever get confused, just go back. Literally pull up this replay, because I even do it sometimes myself, because you just can't really tell because it's a little bit tricky. So I mean, did that clarify a little bit things up? I see a lot of you guys like it's good. Do you have to wait? It's crazy. Got me. Yeah. Okay, so we now know here that we are bullish on the weekly, right? We are weekly bullish. So how we're doing right now, just going to the daily. Now on the daily, are we, oh yeah, my bad, bearish. Are we bullish or bearish on the daily? Yeah, got a little confused there. Okay, this one's easy, right? So obviously, we know we're bullish, but now I'm going to ask you guys the trick question. And again, take your time. You don't have to answer right away if I see a lot of you guys are struggling with it. So we know this is bullish. So let's just put here daily bullish. So now, where would the higher low elbow be, right? So I'm just going to put this example, right, before anybody says anything. We understand that this is kind of what this market looks like, right? This market right here pretty much did something like this. We were bearish, and then now we've broken out to the upside, right? Or we've had something like this, and now we're obviously bullish. So I'm asking you guys, this is obviously our higher high, right? This is our higher high, which would obviously be this point right here. Which one is our higher low? So I'm gonna go back to here and I'm gonna give you guys 3 points. Is it point 1? Is it point 2? Or is it point 3? Okay, let's see. Wow, okay. A lot of you guys are getting it right. Literally every single one of you guys are getting it right. Seeing 2 or 3 wrong. Okay, perfect. So this is the thing. When you're marking off these market structure points, you got to mark off whatever is an elbow, right? If you notice, all of these are clean elbows. For this example, this would be the higher high. And then the higher low would be this point right here. Obviously not this point. This point is pretty much nothing. And it can't be this point or it can't be this point because none of these are elbows. Like this is just one move. Would you consider this an elbow? Not on the daily time frame. If we go down to the 4-hour, it looks beautiful. You can see, I mean, this is where I got the trade, but these are the beautiful elbows on the 4-hour. But you can't make a 4-hour elbow a daily elbow. That's just not how it works, right? Do we all understand this example? Type 1 if yes, type 2 if no. Okay, perfect. So we understand that the daily time frame is bullish. So all we're doing right now is just, are we bullish or are we bearish, right? And then the 4-hour, are we bullish or are we bearish on the 4-hour? Awesome. Okay. Perfect. Correct. So we are bearish. As you guys can see here, we're creating high, higher, low, higher, high, higher, low. I wouldn't consider this an elbow. I just simply won't. I would consider this an elbow. Then we have higher high, and then we have obviously broken under it, right? You could also make these higher low points, but the fact is that, we're bearish. So in this trade right here, we have a 4-hour bearish. So this is where we go back out to the weekly time frame, go out to the daily, look for our areas of interest. I've already done that. So my first area of interest would be this point right here. Obviously, if we come into here and then we break through, this area around here would be my other area of interest. But I leave the area of interest that I'm interested in first, just so it doesn't clog up my chart. So yeah, this would be my first area of interest right here. We have some very strong support resistance level, and we pretty much broke through it and never came back and retested it. And everything that goes up has to have a retracement. Same thing where everything that goes down has to have a pullback. So right now, perfect indication to this trade would be how I did it with the bootcamp guys. Are we 1, 2, or 3? So a very simple explanation. Obviously, this is the area where we're looking to buy. 1 would be here, 2 would be on the way, and then 3 would be at the area. So would this trade be 1, 2, or 3? Fire. Pretty much every single, all of you guys understand that. Again, I just want to retouch up on it. I just want to make sure everybody gets it right. So for this case, we are on this trade because we're obviously looking to buy if you're looking to buy with the daily. So, and if this were to be the higher high, this would be 1, because obviously we don't know when this is going to stop. This could still be going to the upside. The ideal trade for me would be to wait for this to come into this area, and then here have the shift of structure, 4-hour, go bullish. So then we have at least 2 time frames in sync to take the trade up. But we can take our easy day trade here because we have 2 time frames in sync to the downside. You guys are seeing like the beauty of understanding where the market is, right? Because you can get all sides of the market because you pretty much know what it's gonna do. I don't want to say it's like a hack, but you literally know what it has to do. Like this market kind of has to come back here to keep going to the upside. So in order for it to go here, you kind of gotta have to sell it. It's literally a hack. So what a better way to know is you can literally see how it shifts when it's on the way there. So you see the shift right here. The simplest trade on the face of the earth is just wait for this pullback, wait for the sell back. We have here, I don't think we have a crazy round psychological level, but if you can manage to get a wick entry in here, which would be crazy. You have 17600 right there. Do we have anything right in here? Maybe we have a 55. There you go. You have a 1755. So we already know that this is going to be a little day trade to the downside. Pretty much it. So you can determine, do I want to take this sell into here, or would I rather wait for it till it gets here to then wait for the shift to go to the upside? You guys understand this one? Type 1 if yes, type 2 if no. Perfect. Fire. Am I going too fast? Am I going too slow? Am I going perfect? I feel like I'm like chilling, going at a good speed. Sometimes I do this super fast. Perfect. So this is a day trade because it's not the 3 yet. Yeah, so this would be a day trade because you're kind of selling at a 4-hour area of interest. If you notice, my number 1 rule that I said previously was I need to sell at a daily and weekly area of interest. Right here, we're pretty much selling at a 4-hour. You can kind of make it a daily if, I don't want to say force it, but if you drag it on to the left, you kind of do have some structure level here, some structure level here. You look left, you have it's a valid area, right? So you could keep this zone going. And it's a very valid level of resistance, level of support, resistance, support. So it's just, it's a day trade because you're obviously taking these trades, right? So we're moving on now to Euro GBP. So Euro GBP last week, we had this break above, and then I remember on the 4-hour, we were waiting for the breakout of this area. Once we had the breakout of this area, we're waiting for the pullback to then take the trade to the upside. Kind of the same thing as AUDJPY. This gave me everything I needed in here. This gave me my pullback. This gave me my shift of structure. If I would have been looking at this market, I would have went 25 lots right here, no questions asked. Set and forget that shit. Like, I would have not cared. This trade was gonna get taken. But I just simply wasn't looking at the market. My take profit one would have been around here. Other take profit would have been around here. But I just simply wasn't looking at it, which obviously it played out, in my favor. But trade was perfect. I could mark off there easily. 6-7 confluence, probably giving me a C or a B trade. But luckily for me, I wasn't looking at the markets. But now, the beauty of knowing where the market is, you can continue to trade it, right? So just like GJ, this two pretty much look the same. Your GBP just looks like it's ahead of GJ about a week and a half. Whenever this has the push to the upside, it needs to have the pullback to keep going to the upside. Same way how I explained to you guys, GJ has to create that wick pullback. I don't know how long the wick pullback is going to happen, but it needs that wick pullback. So that's exactly what your GBP is doing. In order for it to have that wick pullback, the daily time frame is going to have to go bearish. So if you notice here, we went from bearish to then bullish to now bearish again. So the ideal trade setup is literally the same thing as GJ when we were here, just pretty much waiting for the pullback of this area to sell. You notice here, it would be the pullback into this area to sell. I'm not really focused on it that much because it's just kind of in a choppy zone. Just, if you notice within this area, it's just choppy for the majority of the time. So if you notice, I have it at the bottom of my list. It's not a priority. I actually have my list like this. I'm just going to show you guys NZD. But yeah, just wanted to update this from last week. It's just really not a priority. NZD CAD. So NZD CAD, we understand that we were bearish on the weekly, bullish on the daily, bullish on the 4-hour. So we're still technically bearish on the weekly again until we don't. I mean, you guys are seeing the power of this horizontal line. Until we don't body close above it, we're not. So in this case, we are still bearish on the weekly, and we're looking for our retracement into this area. It just simply doesn't happen. So if you notice, this is kind of what we're doing with gold right now. Yes, with gold. We would be selling into this area right here to then take the trade long. But again, this is what I tell you guys. It's a day trade. The probabilities of it going in your favor are not that great. You're kind of going against the trend in a way. So for NZD CAD, let's say we would have gotten the same formation, which we didn't, but let's say we would have gotten here left head, and then this would have been the right shoulder. We would have been selling into this area where we would have been waiting for the trade long. Obviously, I don't, recommend those type of trades, but they do play out a lot of times, right? More than not, they play out. But in this case, we never got the pullback into this area to take the trade long. Simply just don't take the trade and move on. I'm not interested in NZD CAD at all for this week, so I just simply cover it. For this week, I would probably say my top priority is going to be AUDJPY, GBP JPY, and then gold. Maybe gold is on top of GJ simply because I think it's going to be ready faster. I think AJ is moving pretty quick. If this manages to have any retracement on the 15-minute, let's say this retraces a little bit later and it has a little retracement like this, and it gives you a bearish engulfing, take the trade short. Just give it a nice breathing room, because this is a very nice trade. I do think this trade, I mean, I said it in last week's call. This is coming all the way like down here, so we got to figure out how to get in within that wave. Let me stop the recording here.